Hello, everyone, and welcome back to the show. Well, last week we asked our viewers out there, our Facebook fans and Twitter followers, for questions about taxes for small businesses, and as always, you have delivered. So we are going to get to your questions, and our very first question is about the LLC. It says, if I'm the sole employee of my LLC, that's the limited liability company, do I have to pay both personal income tax and income tax for the business?
Well, there's a problem with the question.
Okay.
And the question is, the person says sole employee. Whether you're the sole employee or not is not the determinative factor. What the person should be asking, if I am the sole member, if I'm the sole owner of the LLC, then I have to pay both personal income tax and business tax. If you have a single member LLC, like I mentioned, it can be disregarded for tax reasons, and you just pick up, I shouldn't say just, you pick up the taxable income on your individual income tax return, IRS Form 1040 on Schedule C. But you have to be the member, not the employee. Employee, you're just an employee. We're talking about ownership. About
the member or the owner. So let's spend just a little more time on the LLC, because we were talking about that as we went into break. Why wouldn't I want to become an LLC? If I want to limit my liability, if I'm starting this company, it just seems very attractive based on what we've learned here so far, that I would want to establish an LLC.
I think under most circumstances you would want to establish an LLC. That is the entity of choice. It's become the entity of choice for a couple of reasons. First, it's very easy to establish. Secondly, if you have one member, or husband and wife is considered one member under community property law, it can be disregarded, so you don't have to file an income tax return for the limited liability company, and you just pick it up on your Schedule C, and you have limited liability, as we discussed, for acts of the limited liability company, or that the employees of the limited liability conduct.
What if it's a brother and sister? What if it's two friends coming together to form a business? How does that happen? How does that work?
If it's two friends, then you have the normal structure then would be you have to file a partnership return.
Okay.
Now, you can elect to be taxed as a corporation, but that's a whole different area. But no, you cannot disregard it if it's two friends.
If it's two friends.
Or husband and wife divorced. In the process of divorcing, then that splits that opportunity to disregard it.
Yeah, and I imagine that brings up a whole other set of issues. If you have a death, if you have divorce, if you have a disability, if you know the relationship just disintegrates for whatever reason, then that creates lots of other problems when it comes to taxes.
Often what happens, clients will walk in, it's two individuals who've known each other, they're friends, they want to go into business, everything is just wonderful.
Peachy keen.
Peachy. Then a couple years later they come in and they have problems. They have a disagreement, they have 50% ownership, they are now at loggerheads as far as making a decision. Often the individuals are different ages. So if one dies, is there going to be a buyout of that interest? How is that going to be valued? Another situation we see often is someone wants to bring in their children into the business. You've got a 50-50 ownership. Says, oh, my children are working for this business. They want to become part owners. How do you structure those? All issues that are easily, or more easily, I shouldn't say easily, more easily faced in the beginning when these businesses are structured than down the road. People are more flexible at that stage, and the documents should reflect all of these potential occurrences down the road.
Down the road, yeah.
But getting back to the three things, liability, how many owners there are, and the tax consequences. On liability, it's kind of a no-brainer that if you establish something other than a sole proprietorship, you can take much more effective steps to avoid personal liability, where your home, your savings, your retirement savings, money you want to set aside is protected, your personal savings.
Right.
Correct?
Other than a general partnership where you have liability for your real share, or a limited partnership if you are the general partner.
Okay. Stuff to talk about with a tax attorney if you're looking at setting up a business, or maybe changing the form of your business if it's currently a proprietorship or a general partnership, correct?
Right,
Okay.
correct.
What about it? Now, when should you do this? We're already in tax season, okay? Let's say there are some small business owners out there who, or people have been doing work and haven't formed an LLC. Now they're getting ready to do their taxes. They're hearing this discussion and they're thinking, oh, I should go and form an LLC. Would now be the time to do that? Could they take advantage of whatever advantages there are in forming that LLC for this tax season, or would that not kick in until next tax
Well,
season?
remember, from a disregarded LLC, the income taxes are reported on Schedule C. So whether you have an LLC or not, from a tax point of view, really doesn't make any difference. So you could form it now.
Okay.
Now, from a liability point of view, if you're operating as an LLC as opposed to a sole proprietorship, that's probably prospective as opposed to retroactive.
Okay, all right. Our next question from our viewer says, what qualifies as a tax-deductible business expense? Can this get a little bit hairy for folks?
It's extremely broad. Keep in mind, first you have to be either in a trade or business, or the expense has to be incurred in the connection with the production of income. Now, its personal expenses are not deductible. Typically, any expense that's incurred in connection with earning that income is deductible, except there are a whole host of deductions which have their own special rules. For instance, pension plans, medical plans, entertainment expenses, car expenses. You go on and on and on. So you can't just generalize, but the general rule is ordinary and necessary that's incurred in earning that income.
Okay, well, you mentioned the car, and as a matter of fact, that's our next question. It says, if I use my car for business, does the mileage and what about the maintenance of the car qualify as a business expense?
If you use your car in business, not for personal use. An example would be if you're a physician and you drive your car from your house to your office, that's commuting. That's not business use. Then, but on the other hand, if you go straight to the hospital, that may be business use. But once you leave your office, whether you're a physician or a lawyer, and you're going to a meeting, that's business use. Now, you have the option to keep track of miles, or you can
Average the mileage, or?
No, I mean, you have the option of keeping track of actual expenses. I'm sorry, I meant to say incurred in connections, or you can claim a mileage amount, which I think is like 56 cents for 2013. That changes, and that's published in Circular E, which I think we maybe posted on the website.
Well, it sounds like you're saying people need to be very
people
need to be very meticulous about this.
Right.
Because it
you need to keep records.
You do need to keep records of it.
You need to keep records of the miles driven, of the total miles, and then multiply by the per mile diem.
That's very important in case you get audited.
Right.
Because if you're not audited, and you then it might not become an issue. But if you're audited, then you very much want to have your receipts, your tax receipts, I mean your mileage receipts, your maintenance, or whatever you're using. And the difference between some people estimate their mileage, or I'm sorry, some people, my understanding is you can deduct for everything. Every time you get work done on the company vehicle or the vehicle you use for work, every time you put in gas, or you can just take a standard deduction for each mile, like you just said.
Right, 56 cents, right.
You can't one month do one thing, the next month do the other thing.
Right.
So keep your receipts either way.
Keeping receipts is excellent advice. In fact, it's a requirement. You file a tax return and you take the position, these are my deductions, and when the IRS, or if the IRS questions them, you have to substantiate those deductions.
How far
those
back in
expenses.
time can the IRS audit? In other words, if you filed the tax return 5 years ago, can you get an audit request from 5 years back?
No, the IRS typically will audit within 3 years. Now, the IRS can go back if you haven't filed a tax return indefinitely.
So how long should you hold on to your receipts if you've been filing your tax returns?
Well, I would suggest around 5, 6 years would be my suggestion.
Okay. Our next question comes from a gentleman who says, my wife and I own a business and are the sole employees. Can we file as a sole proprietorship because we are married, or does this situation qualify as a partnership? And I have a feeling you're going to take exception to that word employees again
Right,
there.
right.
So
I am.
Yes.
I am. You can't be an employee of your own sole proprietorship. Others can be an employee of your sole proprietorships, but you can't. So if he meant to say we are the sole members.
Or owners, right?
Members and owners would typically be the same. If they're the sole owners, then they can treat the LLC as disregarded. And they have the option, since they're husband and wife, they're both in the business, to disregard it, pick it up on their joint tax return, a Schedule C, or file a partnership return. But they can file it on their Schedule C.
Okay. Well, we knew that this was going to fly by, and it certainly has. But we also knew that we were going to learn a lot, and we certainly have.
Absolutely.
And we just thank you so much for your time and for being on the show.
Well, thank you for having me.
Thanks, Shauna, and thanks to all of you. Remember, you can follow us on Twitter, like us on Facebook, and watch every episode of the show online at johnredmannpoa.com or jrpoa.com. We take legal questions all week, so don't be shy about submitting your questions, and hopefully we can answer it on the air. We'll see you next time, and don't forget to watch the extended interview with Mr. Weiler right here on jrpoa.com. Thanks very much.